Hey guys, it's Doc. I was doing my weekend updates and I just thought I'd take a quick run through the internals. But before I do that, I wanted to show you something I found that looked pretty interesting. This is the daily SPY chart, and as you can see that from really about mid-July to near the end of December, we went through this long consolidation period. And that boxed area would give us a measured move up. And once we broke out, we went just about right to that measured move. And then we entered into a ascending triangle, and we broke out of that back in late January, and we've made a measured move above that, this move being equal to the largest width of the triangle. So there's been a lot of real technical stuff here the last few months. It's been interesting to watch. You'll also notice up here that the RSI is in the bullish territory, and right now it's at 78, and so we need to keep an eye on it. So I thought we'd just review the technicals to make sure that everything's okay at this point. Looking at the bullish percent indicator, you can see that we're right at 72. We are on a buy signal. So I want to watch and make sure that this continues to move up some more if this gets any broader. If this, fails, we need to watch it very closely, because this territory we're in right now is a little bit dangerous, I think. I just wanted to throw this in to show you how the sectors have been performing, and you can see I backed this up to the November, January month just to see how energy was doing and show you what a rotation we've had. It was up 7.2% there on the 3rd of January. And since then, you can see that it's made quite a little move to being underperforming the index by, 7%. So that's quite a rotation that we've seen there. So we need to watch and see what's going to happen next. Here's the SPY weekly. The 20 week is running above the 40 week real strong. You can see the RSI on the weekly is above 70. So that's really bullish looking at this point in time. The MACD is up really high and still spreading. So it's an interesting time that we're in right now. Here's the weekly advanced decline cumulative. This is issues, not volume. And you can see here that we're hugging that trend line up, and everything still looks to be in place. So last week we were up plus 614, and the trend seems to be continuing. Looking at the SPY rate of change, you can see that we popped down just a little bit in the past few months during that consolidation period, but we're still moving up, and it seems like we're trending upward at this point. So that still looks bullish. This one, I'm not quite sure what to make of this. Obviously, this is the put call equity only index. You can see that we're on the PPO, we're up in the extreme optimism area. And as we've talked about several times, this is not a very good indication of a top. It just means that the put call volume or ratio is quite low at this time. I don't know whether that's overconfidence or this thing is really on the move. One thing you will notice looking at the Russell index is that it's been moving down recently, and that suggests to me that that's risk off in the market. So we need to keep an eye on this. Obviously, this looks sort of like a high pull situation, so we're going to see this stop at some point and resume up if we're going to see a broad move in the market. Looking at the equal weight index, it's held up pretty well. That suggests there's still pretty broad participation in the market. Just want to again keep an eye peeled on this to see if we begin to see some distribution days and maybe something setting up for some more downside. VIX is really tame right now. We're under 12. We did pop up a little bit, but we're clearly in the channel on this one, and it looks like everything's okay right now going forward. And of course, everybody knows this can change very quickly. You notice it's sort of the tone of everything I'm saying is when we're up here against a market high and you begin to see everybody sort of get this animal instinct, that's when people get hurt. And so when I see this, I really want to try to be cautious. Looking at the Treasury yield, you can see here that the Treasury yield on the 10 years is really at about 2.40 right now. A significant increase up from last September when it broke a downtrend line. And it seems like interest rates are holding. Of course, there's a lot of conversation about Janet Yellen maybe raising rates 2 or 3 times this year. On an interesting note, you all recall over the last 2 or 3 years, every time he talked about any kind of rate increase, the market would go bonkers. And now she's turned around and talked about the maybe having 2 or 3 rate increases this year and market going up. So if y'all can explain that to me, I'd appreciate it. I want to pop over here and look at a couple of things on my intermarket analysis. Copper's been doing really well. And you know Dr. Copper's pretty good at calling the economic situation, and it looks like right now that Dr. Copper is saying that the economy is getting stronger. The Dow theory seems to be confirming this move up in the market. So barring any major change in transportation here in the next little bit, this still looks pretty bullish. And I wanted to end up with taking a quick look at the staples relative to the cyclicals. And typically when consumer discretionary is outperforming, it's pretty offensive, and that seems to be the mode that we're in right now. So all I can say to you is the market is in bull mode. Unless there's some evidence that changes that, we're going to stay in bull mode. Just be careful, I think, with the positions that you take. Make sure you stay in outperforming sectors and be real careful at this point and stay hedged. All right, guys, I'll see you later.